Welcome back. You're watching the Money Show with me, Kavita Thapliyal, and this is the last leg of the show where there are plethora of funds available in the market to invest your hard-earned money. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? We have on board Aditya Shah, Chief Investment Officer, JST Investments. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on themoneyshow@etnow.tv. Hi, good evening, Aditya. Welcome to the show. And we have our first caller online with us, Malini from Hyderabad. Hi, good evening, Malini. How are you doing?
Hello, good evening. I'm doing good. Thanks for asking. And how are you today?
I'm doing good. Thank you so much. And thank you for sending us your query. Can I know something about you? What do you do? And it seems you're investing now. You already have a financial portfolio?
No, I don't have any portfolios.
All right, all right. What do you do, Malini, professionally?
I'm working for Amazon as a customer service advisor.
Oh, nice. And you want suggestions or tips for your tax saving investment before March 31st, right?
Yes, that is correct.
Currently, do you have any insurance policies?
No, I do not have any.
Malini, do you read about markets? How well versed are you with the understanding of equity markets?
No, I have not read about any equities.
All right. If at all we advise you something in equity where you might get a tax benefit, would you be interested in it?
I have to check and I have to decide if I'm interested in it.
Okay, so what exactly are you expecting from us? Because I believe that you are still in the regular tax regime, which is the old tax regime, right?
Yes, that is correct.
Okay, so what exact understanding do you have of tax saving investments?
Okay, I was receiving some messages on my mobile and I've read the news that after March 31st, if we invest money, there will be a tax implemented on the investment. So before 31st of March, if I invest the money, there will be no tax. It will be tax-free investment. That's what I know.
Okay. I don't know if you'll be comfortable sharing your annual package with us because then we can have our guest actually analyze and tell you, do you really need to have tax saving investment in your portfolio, or you can just get away with it. Can you do that?
Yeah, sure.
Okay, Aditya, can we take all these details with her from her
Yes,
now?
definitely, ma'am.
Yeah. All right, Malini. Can you tell us your annual package?
My annual package is only 3.84. When I joined Amazon and it was like 1 year back, so now my pay scale would have been increased.
Okay, perfect. Thank you so much for sending us your query, and then let's have this discussion with Aditya now as to how she should go about. So one thing, Aditya, that clearly sticks in my mind, she read some WhatsApp messages where she got to know that if at all you invest before 31st, you will have some tax saving in your salary, and you will get more amount in your hand. It's very common for people to get these kind of messages, especially this time around the year when the March 31st deadline is just so close, and you're an old tax regime, and if at all you've not been following all of these things, you would want to know about it. And I'm glad Malini actually reached out to us and asked us the right way to go about it. Does she need to invest?
And what was her annual income? I missed that number.
3.8.
3.8 lakhs. Okay. So, ma'am, she absolutely does not need to invest
Exactly.
for this year, which is the FY23 income up till 5 lakhs for both the regimes are tax free. So, from my point of view, she does not need to actually invest. Her income is already below 5 lakh rupees. If she invests, her money will get locked in, and she will have to bear that lock in. For example, in an ELSS product for 3 years, or in a PPF product for 10 to 15 years. So point number one, if your income is less than 5 lakh rupees, no need to tax it. Now, if your income is above 5 lakhs in the old regime, depending on the exemptions that you are taking, you need to decide whether you need to tax save or not. For the investor, I will suggest don't invest just for tax saving. Tax saving is an added benefit, but start investing slowly and steadily into the equity markets. I understand that the investor is very, very young. Slowly and steadily start to invest in the markets. Second point is once your income starts to exceed 7, 8, 9 lakhs, that's the exact time that you should start to tax save. Because if you tax save, then you get a lot of benefit of not paying additional tax on your income. So right now you file your income tax return, show your income tax as nil, and if your company has paid any tax, you get it back at the time of filing your income tax return.
Very important for Malini to understand the difference between having tax saving instruments in the portfolio and also having a goal based strategy for your investment, which can be aligned with your tax saving investment. So, Malini, clearly the answer for you is right now you don't need any tax saving investments to save your money or to get more salary in your hand. But what we would like to recommend or tell you or suggest you is that you need to, in fact, have an investment strategy in place. Malini, I want to know from you that would you want to invest something or maybe just take investment tips from us later on? Not tax saving per se, but generally for your financial goals in life. Do you want to begin your investment journey with this?
Yes, actually, I have one more question.
Sure.
My mother has a fixed deposit of 25 lakhs in her account. Like it is divided into multiples, like 5 lakhs, one deposit, 6 lakhs, 5 lakhs. So it's about 25
I'm
lakhs.
not able to hear you properly. Are you talking about the fixed deposit that you have?
And that I have, it is my mother who has
Your
got a
mother.
fixed deposit
Okay.
in multiples of 5 lakhs, about 25 lakhs. And will that be taxed after March 31st?
Your mother has fixed deposit of 35 lakhs placed differently.
No, 25 in a multiples of 5 lakhs. So she has got 5 lakhs deposit of 5 fixed deposits.
Okay. So Aditya, Malini's mother has around 6 to 7 fixed deposits of 5 lakhs each. The total is 35 lakhs. So
No,
she
not 35, 25.
25, sorry. Okay. 25 lakhs. So she wants to know if that will be taxed for her mother.
The interest that you receive on the fixed deposit is added to your income, and it is then taxed as per your income slab. So you need to check if your mother's income is less than 5 lakhs for the year, it will not be taxed. However, there is 10% TDS that is effectively cut by the bank and deposited in your name that you need to recover if your fixed deposit income is not taxable. So what you do is check if your mother's income is above 5 lakhs or not. If it is below 5 lakhs, then not a problem, no tax will be cut. If it is above 5 lakhs, then you need to tax plan and see how you can save tax and not pay any income tax on the interest that you get. So all in all, generally fixed deposit is a taxable product. It gets added to your income. You need to check your income and then come to a conclusion whether it will be taxed or not.
That will be all, Malini. Thank you so much for sending us your query. Do you want to ask anything else to Aditya? We actually have a next caller also waiting for us. Malini?
Right. So I've got some money invested and in my savings account. I have saved some money in my savings account. I would like
There
to
is some
know.
audio issue, Malini. Can I please request you to again send us this query via email, because it will be better for us to get all the information in detail and then we'll do a complete financial planning of that. Thank you so much, Malini, for sending us your query. We have Mr. Tejpal Singh online with us. Mr. Singh, good evening. Thank you so much for sending us your query. How are you doing today, sir?
I'm doing well, Kavita. Thank you very much for taking up my portfolio.
Thank you so much, sir. All right, so let's begin. We have most of your details. Is there anything that you want to add?
No, not really. I've asked the queries. There are three main queries, and fourth thing I could add is that my percentages that I have in my investments, whether like mid cap, small cap, large cap, or flexi cap, etc., etc. Are those percentages make sense, or do I need to change? It's also that I understand I'm an aggressive investor. It is a legacy investment. I'm okay. Me and my wife, we will do well. We have our own house. I have my pension, my medical, care is taken care of. I'm about 73 years old, and my wife is about 72. And this is what I'm doing. This is legacy investment, basically.
You know, it's so rare, Mr. Singh, that we get to see investors, of your age being so aggressive in equity and for trusting this asset class. And I believe you've been investing since quite a long time.
About 3 years, 2020 onwards. And I think I was lucky. I just by the chance than by planning, I got in at the COVID time when the markets were low, and I think we're doing all right.
You know, you are so different from our usual viewers and investors that we come across. I'm sure even Aditya would agree to that. Sir, anything else you want to ask? Can I just go to Aditya and get the portfolio solved?
Yeah, you can get the portfolio review, please.
Sure. Aditya. So let's take it one by one. So lump sum or SIP, the first question that he wants to understand. Aditya.
Ma'am, today, first of all, congratulations to him that he's so old and he's investing in the market. Lump sum or SIP, always a simple answer, always SIP. Today, market conditions are very toxic. We've seen banks failing across US. Today, banks in Europe are getting a lot of hammering. So market conditions are toxic. We've seen over the last 21 months, Nifty give a negative return of about 5%. So all in all, from here as well, there could be a chance of a correction as US and Europe undergo a recession. So all in all, never invest lump sum. Try to break down your lump sum money also into 5 or 6 SIPs. That will really work for the investor.
All right. Now his query on Axis ELSS.
Ma'am, we have seen a flurry of activities on Axis, the mutual fund. We've seen fund managers getting banned by RBI for front running, and a lot of fund managers also leaving the AMC. So all in all, right now, Axis AMC is in a rebuilding phase. We don't know the new strategy of the new fund managers. So my advice to all investors who's holding Axis mutual fund is be very careful. Give the new fund managers some time. In the meanwhile, whatever investments you have got, I am advising investors to exit them out and wait for the new strategy to play out over the next 1.5, 2 years, and then see what really happens.
The recommendation that you are giving, Aditya, is of what funds?
Axis, the investor has got Axis ELSS mutual fund whose lock-in is about to end. So on that fund has really underperformed the market for the last 1.5 year. And my suggestion would be to exit out that fund. Not because the strategy is not good, but the fund, the whole AMC is undergoing massive changes on the fund management side, and we don't know the new fund management. So we will like to exit the fund for now and wait and watch.
And you're suggesting PPFS Flexi Cap and UTI Nifty 50?
Yeah. So on the asset allocation side for the investor, see, the investor is 73 years of age, and I will not suggest him to be very aggressive equities as his investment strategy is. The investor must not be in mid caps and small caps because many investors chase returns in the mid cap and small cap side of it. However, they are extremely volatile, and given the age of the investor and the retirement that the investor has taken, the ability to recoup those investments in the short term will be very difficult. So my opinion is, if you want to be aggressive equities, restrict your exposure to the large capish funds, or then try a flexi cap fund where flexi cap funds also have a little bit of a large cap and a stable company bias, so that your investments remain protected if the market undergoes a severe drawdown. We are seeing there has been a severe drawdown in the US market. There's been a severe drawdown in the European market as well. India has been safe, but we are also undergoing a time correction. So in my opinion, restrict your investments to Parakpalit Flexi Cap Fund, UTI Nifty Next 50 Fund. Do not try to go into a small cap and a mid cap fund, considering your age. They can be really very volatile. We've seen through 2018 where these funds were down 40 to 50%, and there was a real risk for investors. So restrict your investments to large cap and flexi cap investments. consistently SIP them, be very patient, and you will do really well.
Is there anything else you want to ask?
Yes, certainly because the sound has not been very good. I could understand whatever he's saying. Don't be so aggressive. Stay with large cap on a combination
Sure.
of large cap.
So there are
mid cap,
funds also
and
recommended,
flexi-cap.
sir. We have this show put up on our channel's YouTube as well. So maybe if you're not able to catch up the recommendations now, you might just want to look up the show on our YouTube as well. Is that all, sir?
This is all. Thank you very much for taking up.
Thank you so much. We will move on to our next viewer, who is Prakash Jadwani from Vadodara. And Aditya, he wishes to invest 10 lakhs lump sum in thematic and 2 to 3 IT funds for short term. Very interesting. I wish we had Prakash Jadwani on call with us today. But so there are criterias based, okay, on the IT funds that he wants a recommendation on. Excellent portfolio which can generate good alpha, has good chief investment officer, and the fund should be dynamically managed and should have consistent record of churning out good alpha over years, and should also have large AUM in relative terms. So these are his criterias. Based on these criterias, he wants a recommendation from you. So let's talk about the entire approach that he has in selecting thematic funds. We don't have him on the phone line, so we don't know what kind of investor he is. But then I hope, since he looks like a seasoned investor based on the criterias he's given us, he knows what it is to invest in a thematic fund. Okay. How are these criterias when it comes to selecting a thematic fund?
Ma'am, the criteria are good, but the thematic funds, he wants to invest in an IT thematic fund and his view is short term. I don't think that he will be able to create an alpha over the short term. Let us understand what is happening in the IT sector. In the IT sector, most companies are exposed to US and Europe, and you are finding US and Europe are undergoing a severe downturn, and they continue to go severe downturn. They will continue to undergo a severe downturn in 2023 and 2024 as well. So, if he's a long-term investor and he wants to accumulate these units at a lower price, then I can really understand. However, in the short term, these sectoral funds will not be able to give returns. So all in all, these thematic funds are undergoing a severe down cycle 2023 and maybe 2024 as well, depending on the interest rate hike cycle. These funds will undergo a down cycle. So he needs to be very clear about this. That next 1.5 2 years will not be great for these funds. Maybe after that in 2025, as the economies continue to come back and recover, he can generate sufficient amount of return. I have a reservation on thematic fund selection. Thematic fund selections carry a very high sectoral risk. Many investors seeing the returns that IT or technology funds have given in 2022 are of the view that this downturn is very short in nature and these funds will come back. Not necessarily that these funds will come back very quickly. You will find that maybe over the next 1.5 2 years, they continue to
Sure.
underperform. So, in my opinion, he has to keep all of these risks in mind. I have still
अभी तक
suggested
जवाब नहीं दिए क्या इसने?
ICICI Technology Fund and SBI Technology Opportunities Fund. These two funds I have selected, but I have given the disclaimer not for the short term, over the longer period of time, he can accumulate these units and try to go into an SIP route into these funds. Do not invest lump sum into both of these funds.
All right, that will be all today. Thank you so much, Aditya, being on the show and helping our viewers with their financial portfolios. And we move on. Andhra Pradesh hosted Global Investor Summit 2023 on March 3rd and 4th of this month.